Hello traders and welcome to a new day trading order flow video of mine. In today's video, we're going to be talking about the new updates that have just landed on Tensorcharts.com and how to use them in a strategy. So before we start that, let's talk about the price prediction challenge and the new updates that we made to that. So instead of just PMing this at Chop, that's the user that was taking the price predictions, now we have a bot that will do that. So all we do now is just go to direct messages, as you can see right up here, where it says 24 online, just go to here. And after you go to direct messages, just type in game bot. So that's what the bot is called. And game bot will pop up, and then just type in the price that you think that the price prediction challenge will be. And then also submit your chart, and then a custom message if you so choose. That will go in my YouTube video if you get the price prediction challenge right. So this week's price prediction is going to be NEO USD on Bitfinex. And it is going to be what is the highest price that NEO USD is going to be going on Bitfinex. All right, so now let's get into day trading order flow with the new Tensorcharts.com update. So I want to start with just the smaller updates and then build to the biggest update of all, and probably the most helpful strategy that I've found on this entire site, which is the large trades tracker. This is really neat. So let's start with just the smaller stuff before we get into strategy here. So one really cool update is you can type in, BTC USD. You can actually just type in from these. Some Binance coins were added, all of these, and you can also star a coin. So I hit star, and you can see that it pops up right over there. So I started these just for quick selection for myself, which can be pretty helpful for just quickly, going like that. Additionally, we have some new really cool time frames: the 1 day, the 15-minute, and the real time. So the real time is just going to tell us these real-time tick changes that occur on the exchange that we're looking at. So this can be pretty helpful for market makers, arbitrage traders, order book traders. Probably not day traders or even scalpers because it's so short term. But maybe you can think of a strategy to use with it. So yeah. And now let's go into a slightly, let's fix that. Now let's get into a slightly bigger update, which was the count right here and the highlight volume. I think this one was already here, but I think this one is new. But let me talk about this because I don't think I've talked about this yet. So one thing that you can do is if you zoom out here, and if I hit minus here, so I go to lower precision, I have highlight volume over 100. What this is going to do is it's going to tell me price areas that have at least 100 volume in the order book in that price range. So at 79.20, we can see that there are 146 Bitcoin to be bought. And then up here, 112, and so on as I do that. The green line is here, right? And this red line is here. That just represents this wall right here. So by doing this is really the same exact thing as this. When you go here, the only difference is that these blue lines are going to tell me cancellations and past order walls. Whereas these are going to tell me these live present offer and bid walls. That can be kind of helpful. If you would like to scalp instead of swing trade with this kind of thing, treating these as potential support resistance or as spoofing areas, you can go to higher precision and you could just use a 25 if you want, or even a 50 if you get a lot of volatility. So if we go to the 25, then you can see that there is a bid wall that has formed down here. So how you interpret that bid wall is really up to you. You could interpret that as a spoof, to push the market up, or an actual wall that if price goes down, then it might fill. But you can see that bid wall actually just immediately got canceled when this offer wall popped up. So that's interesting. I wonder what that means. Okay, so that's one thing you can do. Another really cool feature that was added was this count. So this is going to actually play a very important role in determining whether a wall is full of retail traders or full of institutions, or at least full of larger traders. So typically we want to be trading with traders who have more capital and more volume, because they can, if we trade with them, trade and do what they do before they do, or before the majority of them have done it, then we can really make money on those large volume and large price moves. We typically want to be trading against the smaller retail traders who are typically just filling the liquidity of larger traders, as it's known. The large eat the weak in the market, unfortunately. That was dark, but it's true. So this count right here is just going to tell us, as you can see, these numbers right here represent the count. This count is going to tell me how many individual orders make up that wall. So right here you can see we have a Bitcoin offer wall of 10 Bitcoin. That's made up 10.28 now. That's made up of 5 different orders. So 5 different limit sell orders that were put there. Typically, this isn't always, but typically, when you see a large offer wall or a large bid wall that does not have a large amount of orders here, that could be the presence of some larger players, which could make that wall stronger. On the contrast, imagine that you see a 25 Bitcoin bid wall down here. And in that 25 Bitcoin bid wall, you see that it's made up of 50 different individual limit orders. So this could be the presence of many retail traders. So that wall could just be easily cut through. So price might just not even respect it, or so on. Or it might be front run and never hit because they are retail traders, as you know. So that is one thing to keep in mind about how to use that. You can use it on the shorter term with these kinds, but you can also use that in the more longer term with these larger moves as well. So if I do highlight volume 100, we can actually look up the makeup of those 100 plus order walls. So this is a pretty powerful order wall. We have 143 Bitcoin to be bought, but 35 orders. So there could be some larger players in this wall. However, we have a 105 offer wall up here, but there are 64 individual limit orders that make up that wall. So that could be maybe a weaker wall. And again, not every order wall is going to be genuine, meaning it's not going to stay. But the lower the amount of limit orders there are, the more likelihood there is of a larger player being involved who's actually trading with more Bitcoin, and that larger player is probably going to have more of a sway on the market. So that larger sway could either be spoofing with artificial demand or artificial supply, or it could also be an actual wall that is trying to get accumulated or distributed by institutions or large retail. So yeah, so that's just a really helpful tool that you can use to discern whether a wall is pretty much made of retail or made of more institution, like only 20 orders for 108 Bitcoin to be bought here. So this would be relatively strong of a wall. If it stays and price goes down to it, it might hold as support for 79.70. Yep. So that's just a really cool tool that you can use with the order book here. So let me go back to plus and change this back to 25. You get these larger offer walls up to there. Now let's go to my favorite change that was made here. Actually, first I'll just quickly do this one. We had a new thing to the trades counter. Just a few things. You can expand it. You can also group your counters. So you can see like these are not grouped. It's just kind of like all together. If I hit group, it'll group the M's together. So the 5 minutes will go next to each other. The 60s will go next to each other as well. This is pretty helpful because if you want to, find in the last 5 minutes the trades counter, so the ratio of market buys to market sells, and you want to do it on like the 1 hour or even on like the 8 hour or something, then you could group those together as well. All right, now let's get to the good stuff. The large trades tracker is incredibly helpful. What this does is it scales itself, as you can see. So right now we're at the high scales at 24.7. But basically all this does is that it tells you when a large market seller market buy order has occurred at a certain price. And when it does, when that large market seller, large market order, large market buy order does transact, what it's going to do is it's going to pop up with a little bubble right here. So if you can see here, I can actually make it there a lot of bubbles, right? Bubble's a pet word, a lot of circles here. This is just too much noise. I don't really find that too helpful. And even this I find is too much noise as well. Just too many circles here. I like to put at the very maximum, as you can see here. And at the very maximum here, we can actually see some very interesting dynamics that are occurring. And there are reasons to why these things did occur. So typically, just talking about volume, let me disable that. Just taking a step back and just talking about how volume operates. Typically, before a large price move occurs, we are going to need to see accumulation or distribution of institutions. And moreover, on that accumulation and distribution, before we see a large price change, we're probably going to see a large change in volume, i.e., it could be many retail traders who are market selling on a retracement, and then price just shoots right up, and they don't even know why that happened, but they were actually accumulating positions. Or it could be something like price goes up, like this, And then volume spike, just everyone buys in, and then the market goes down and retail is confused because this looks so strong. We can actually use that same kind of methodology by looking at the large trades tracker. Let's zoom in on a particular example here. And before we start with talking about how to use this with strategic method, you do want to be trading against the counters ratio. So what I mean by that is we're probably not looking for a spot to sell when the counters ratio is red. Remember, the counters ratio is just the trades counter, 60, graphed, right? I have 3 just to make it brighter. So we typically aren't looking for a spot to sell around here. This isn't where we're interested in selling. We're more interested in buying for the next cycle of price. So what we want to do is trade against the counters ratio, and when we trade is when we see a large trades tracker pop up with that circle. So let's zoom in on exactly what happened here. At the very center of this, you can see that there was a very large market sell order of at least 24.7. So this market sell order had occurred right about there, and then price went down a little bit very quickly, and then shot up with a little bit of a price tail, began the uptrend. What is the psychology behind why this occurs, and why does this work, and why do we want to trade against it? Well, the psychology behind why this occurs is not every large trader who has dozens of Bitcoin or even more is going to be institution. Many of them will be institutions or using HFTs, market makers, more complex methods to take liquidity from retail. That's typically how they trade. Especially with the larger liquidity traders, they kind of have to, because they can't really find other prices to trade out besides targeting trader stop losses. And then we just have large retail who maybe bought Bitcoin early or just have a lot of money and so on, who are trading with dozens to hundreds of Bitcoin. But regardless of who is trading this, we can still use these dynamics to either trade against or trade with. So we have a downtrend here. In that downtrend, we have a red counters ratio that goes a little bit deep. And then we have this large market sell. This could be an indication that everyone who wanted to sell in this downtrend here has already sold. So retail traders who already wanted to dump, institutions who already wanted to distribute have likely already done so. And at the very moment where everyone who wanted to sell has already sold is going to be the best spot to buy. Because if everyone who wanted to sell has already sold, no one else is going to sell, then the price is either going to go sideways or up. So that would be a pretty good spot to buy. That could have occurred here. And when you get a very large market sell order, typically that might pressure retail to do the same thing, to sell. When retail market traders see a very large market sell order and then price beginning to move down rapidly, if they already had it in them to want to market sell or thinking about maybe dumping, that might pressure them to hit the sell button and sell to an institution. Additionally, with a large market sell, that could be cutting through some trader stop losses, and you could get that avalanche of stop losses where when one stop loss gets hit, that's gonna market sell to the next available bid. But if that next available bid's at another trader stop loss, it's just gonna keep cascading down until the last stop loss within that range has been hit. And those stop losses are just going to accumulate positions for institutions who put limit buy orders at retail stop loss areas. So this could be a really good spot to buy. We have a single large market sell order here of at least 24.7. This number will change, I will say, over time. We're probably going to get a large one there. We did get a large one there, and market went down just barely and then went back up. Now here's the interesting thing. The market did go down again, but here we got another very, very large market sell order. And not surprisingly, price went up here, price went up there as well. This is going to be not the best example, I must say. We have a green counters ratio, meaning that there's been market buying, and then we get this. I wouldn't want to trade with the counters ratio, meaning if other retail traders have been market buying, I probably don't want to market buy this. I'd rather just wait for traders to begin to market sell, because that's when these trends begin. And then when a lot of retail traders begin to market buy, that's when the trend ends. But yeah, so I'll be trading this by using it against the counters ratio. This would have been a really good spot to buy. So we see another example of this here. We have a very green counters ratio, meaning a lot of market buying has occurred, but we see a large market order to buy and a large market order to sell that have occurred over 24.7. This is probably not a spot where we want to trade. We do get previous resistance becoming future support, but two things are not in our favor here. We have large volume spikes here. This could indicate that many retail traders, many traders in general who wanted to buy have already bought. Or it could even indicate that institutions maybe pressured many retail traders to market buy to fill their limit sell orders, and because of that, they're going to pressure price to go down naturally so that they can buy at a better price. So because of those kinds of dynamics, these large amount of market buying, this is not a spot you want to buy, even though, of course, price does go up here. This is a pretty good spot to sell, though, and I'm not just saying that 20/20 hindsight. You have a green counters ratio, right? Long green counters ratio, a lot of market buying, and then you see one large market sell order right there. So this is a spot where a large transaction occurred and actually initiated the downtrend. So this would have been the optimal spot to sell right after this trader had market sold and then price went down. I do want to say something about this. Two things about exactly what's going on here and why you probably just want to do nothing or sell and you don't want to buy. If you watch my White Coffee and series, you would know that when price moves past support or past resistance, you want to look at volume. If you see high volume and high momentum and price closes past support or closes past resistance, typically it'll just continue moving in that direction. The instance where we want to trade against those kinds of moves happening that might be stop loss hunts include very, very low tails, so a low tail down to like here, or a very, very high tail, a high tail up to like here. Sell, low tail down to here, and maybe you want to buy. When price closes below support, though, that's another thing that might not be great. So what happened here? We had a lot of market selling, and that actually pressured price to go below support. A lot of selling below support. This is probably not a spot you want to buy. One other thing is that we also have this green counters ratio as well, and we have a long period of sustained market buying. I can't really see why market buying at support here would be great. But again, I do have 20/20 hindsight, and I mean, the viewer, of course, is going to have 20/20 hindsight as well. But this is just an example. We get this strong candlestick with high volume downward, a lot of market selling. Probably not a spot we want to buy. Now we have another example that just occurred. So we have this. We had one where just a ton of volume was transacted here. So what occurred here was, again, at least 24.7 Bitcoin were either market bought or market sold. Here you can clearly see it was a market buy because it was a green circle. So this could indicate that the uptrend is dying and that we might actually see a move back down. That would make a lot of sense. The counters ratio is green. The large trades tracker, the circle here is green as well. This is probably not a bad spot to short or to sell, and maybe target a retracement or even target a reversal. Retracement or reversal both would probably be fine for a high probability trade. Yes, that's basically just the basis of how to use some of these new tools from Tensorcharts.com. And I would like to thank David, the creator of this site, who did a phenomenal job of adding in a lot of new material. And on his Twitter, he actually does polls and asks traders for suggestions to give him ideas for these new kind of updates. And yeah, so you can check out his Twitter if you want and get in touch with him because he really is doing a great job, as you can see here. The large trades tracker is great to be combined with the counters ratio to show you what those potential larger retail or larger institutional players might be doing in the market. And we typically, again, want to trade these as reversals. Here it was a bit different because this already was the act of a reversal, as you can see, of a bearish reversal down here. We typically want to sell when these kinds of large transactions occur, or buy with like a red counters ratio here, and then we get that one large market sell order or one large market buy order, either one. Because that would indicate that potentially, like right here, many traders who wanted to market sell have already likely done so. And of course, it's large volume, so it's a volume spike. And finally, a large change in volume typically leads to a large change in price, and that's what occurred there, and that had occurred here as well. So handy dandy tool that you can customize here. If you want to change the scale, that's not going to do too much except the size of the circle. So I do that to like 10. You get like crazy town here, but you can also make it like 0.5, where it's like a mini, kind of thing here. I do think that if you want to trade, one little tip here, if you want to trade on a higher time frame, like on the 15-minute, it's not too helpful here, so you might actually want to make that smaller. So you might want to do like 0.3 or like 0.5, so you can get a little bit more fine-tuned. If you do trade, you know, those higher time frames, you might want to make that scale a little bit better. But yeah, so that's going to do it for this video. I hope you enjoy the new updates to Tensorcharts.com and the way that you can use Large Trades Tracker to try to trade reversals by using order flow in conjunction with the counters ratio, and also potentially using support and resistance by these kinds of highlighted order book levels. And then also looking at their makeup of how many orders make up those levels to gauge how strong or how weak these are. You know, strong 34, weak 67 for 100, and so on. And yeah, so with that, happy trading and have a good day.